MNAV just stands for the multiple to the net asset value, which is their way of saying the stock price is trading at a premium to the value of their Bitcoin. And I know all that still sounds insanely complicated, makes no sense. In other words, an MNAV of more than 1 means their company is worth more than all their Bitcoin. And below 1 times MNAV means their company is worth less than all their Bitcoin. Okay, so if the stock is trading at above 1 times MNAV, that is good, that is what they want. In other words, when the market is willing to pay a premium for a share of MicroStrategy that's worth more than the underlying value of the Bitcoin it represents. Then, in that case, MNAV more than 1, they will sell their stock into that premium. This allows them to raise dollars cheaply and then to use those dollars to top up the cash reserves, which is what is used to pay the dividends. Hopefully that's clear. That's how they built the $1.4 billion cash buffer. But then there's the other outcome, right? The not so good one. And here's where they show what happens if the stock ever trades at a discount to their Bitcoin. Remember, that's when the MNAV is below times 1, right? It says sell Bitcoin derivatives. In other words, the moment the market stops overpaying for their Bitcoin, everything flips. They stop issuing shares, because that would be like selling $1 of Bitcoin for 80 to 90 cents. You don't want to be selling your Bitcoin at a discount to anyone, right? And if the cash reserves are not enough and they run out, the only way to keep paying those preferred dividend investors is to start selling pieces of the Bitcoin pile. That is the structural comparison that people say looks a lot like a modern version of what could end up becoming the death spiral. And by the way, the death spiral looks like this. Once the cash pile runs dry, they're forced to sell Bitcoin. Selling Bitcoin pushes the price down, which makes the company worth less, which means they have to sell even more Bitcoin later to fund their debt obligations. So it has this cascading effect, especially when the stock is not trading above MNAV. That just means investors would not be willing to pay a premium for the company, which could realistically end up happening, and that would be very bad for the entire industry and, of course, the price of Bitcoin. So if I put you to sleep, let me just tie everything together and make it super simple.